Is democracy in Europe going up in smoke and the climate with it? Tonight we dive deep into the world of financialization. Are the people who brought us Brexit now serving us climate disaster? Good evening, everyone, and thank you for checking in. And thank you here for all your patience. Our special guest, Théo Bourgeron, had some problems with the railway, so maybe we should have a next debate on Europe's railway. I think that's a good idea. But for now, giving a warm welcome. Before that, I will introduce him briefly. He's one of the authors of Alt Finance, How the City of London Bought Democracy, a book that was recently published in the Netherlands titled Geldschieters, Investeringsfondsen, Autoritarisme, moeilijk, en de strijd tegen Europese democratie. The book at hand today, Geldschieters dus. Théo is a researcher at the University of Edinburgh. He has published in many international journals on the subject capital, accumulation, capitalism and environment, and he's here with us all the way from Scotland today. A warm welcome.
All right, so should I talk?
Yes,
should I begin?
Please.
All right, so thank you very much for being here all, and apologies again for being late. I tried to travel by train, and it was a complicated journey. I woke up very early, and I really wanted to be here, and I'm glad I'm just 20 minutes late, despite a 10-hour, 11-hour journey. And so I'm going to talk about the book. I don't know if we have a PowerPoint. I think should I begin with an introduction of the book? So I was told I would make a presentation of the book, the main arguments, during 20-25 minutes. Is it fine? Yeah. And that then we would discuss. And I'm really first. I thank everyone at Balie, especially Keith, for inviting me and us. I also thank Johan Elbron for the translation of the book, which is great, and also Reijer for being here. I've been looking forward to discussing with you for a long time, so it's really good to be here. And thank you everyone for being a crowded audience. So the book was published in France in 2011, in January 2011, and then we translated it in English with Pluto Books, as you see here, in 2022, last year in October, and it was published a few weeks ago in the Netherlands, and so it was written with Marlène Benquet, a French researcher, myself, Théo Bourgeron, and thanks again, Johan Elbron, for the Dutch translation. And so I will go to slide 2. I don't know if there is a way. Yes. And so the book deals with an issue that I think is still quite contemporary, which is the issue of how we analyze the populist decade. So you may know that in the 2010s, there were several events that happened in several countries, like the UK with Brexit, the election of Boris Johnson, in the US, the election of Donald Trump, in Brazil, the election of Jair Bolsonaro, that made many people talk about a populist moment, a populist decade in politics in high and medium income countries, with many electoral results that had a similar similarities between them. These were political outcomes of elections that were unpredictable. These were events that were politically opposed to established neoliberal institutions. So if you think about Brexit, for instance, it questions the European Union, which is a flagship institution of neoliberalism. If you think about the election of Donald Trump, it also questioned the WTO norms, the insertion of the US into the global trade order. And finally, these were events in the 2010s, the so-called populist events, that were apparently opposed to the interests of the corporate sectors of the various countries we are referring to. So if we think about Brexit, for instance, you see here that the City of London Corporation said that it was against Brexit and it was supposed to represent the financial sector. So we'll see it's not exactly the case, but that's what was said at the time. If you think about the reaction of stock exchanges to these events in the 2010s, you had each time with the election of Donald Trump, with Brexit, negative reactions from stock markets. So here you see the FTSE 100, which represents the dominant stock market in the dominant index for the stock market in the UK that fell on the announcement of the outcome of the Brexit referendum. So you have a series of events that look similar, but if we look at the next slide, and so you had many interpretations of this that I'm going to challenge, but that were interpretations in terms of electoral insurgency. You had many people that said that in the 2010s we lived a period of electoral insurgency with the working class and what some people refer to as, for instance, in the case of the Trump election, you had Bill Clinton saying that this was the revolt, the rebellion of angry white men against the establishment, the elite, and so in the case of Brexit, you had a similar picturing, a similar narrative over the event with, for instance, on the next day after the referendum was announced, Nigel Farage who said that it was a victory of ordinary people, decent people against the establishment. And to some extent, you can substantiate it with electoral cartographies, electoral maps. So here you see the map of the Brexit versus Remain vote, and you see that indeed people in London, in the wealthy areas of Britain, voted for Remain, and people in the north of England, in the so-called Red Wall constituencies, voted for Leave, even if in Scotland you also have very poor people that also voted for Remain, so actually it's more complicated. And next slide. Actually, my argument quite opposes this view, and I'm going to explain how. So, for instance, I'm going to begin just with an anecdote, but if we check at this picture, when Nigel Farage was pictured saying that it was a victory of ordinary people, we can already see some dissonant elements. So, for instance, on the left side of the picture, you see Aaron Bank, who is one of the founders of the Brexit campaign, and who is also someone whose wealth is, I think, 200 million pounds, and who made a fortune in the insurance sector, in the offshore insurance sector, insuring motorists and high net worth individuals through tax haven structures. Then the other guy with a red circle is called Richard Tice, and he also became quite wealthy, funding a real estate investment fund. And Nigel Farage himself actually was not exactly an ordinary people, because he was a former London Metals Exchange trader, and his father was a London Metal Exchange trader, and his brother actually was also a London Metal Exchange trader. So he was not exactly an ordinary person. And actually that's what I'm going to investigate, and that's what we investigate in the book. And there is a concept that I like, which is a concept by Quinn Slobodian. So I pictured one of his articles, but I could have pictured him directly, who is a US scholar that Reigers knows better than I do, but who tried to analyze what happened in the 2010s, not in terms of the backlash from the angry working class who are left out by the globalization, etc., but to try to investigate the upper class, the business class support for these events and for what we call the populist decade. And so in his book, he calls this, in his article, he calls this the backlash from above. I think it says this quite well. And so that's what we try to do as well in the book with another case, which is Brexit. But from that, we try to expand on other issues. And so I like the next slide. So we build on at the beginning, we build on the Brexit referendum. So now Brexit is quite far away, but it's very interesting for an empirical reason that I'm going to detail. So you might remember Brexit, most of you in the room. So it was the UK leaving the European Union. There was a referendum, and the Leave side, who wanted to leave the European Union, won by 51.9%, and the Remain side lost. And we investigated, next slide please, the donations during this referendum, which actually is a unique case of a database where you can observe in a quite pure way the support of business sectors to the various sides of the referendum. Maybe you can also find this in US presidential elections, but I don't know many other cases where you have databases of donations in open access, which is quite rare already, and for elections that are simple, because if you look at parliamentary elections in the UK, for instance, you have 500 constituencies with local MPs who have different interests, who are friends with someone, some industry, etc. So it makes everything complicated, whereas here you have two sites. You have one database, it's open access, and so in the database it just includes the donations that are higher than £7,500, which equates to approximately 9,000 euros. So donations from quite wealthy people. I don't know if many of us would donate this for a referendum, performed mostly by individuals, corporations, trade unions, associations, lobbies, etc. And so we investigated it, and it's the first chapter. Then we go to other issues, but we investigated it. And I would like to stress before I begin with the analysis that the objective was not to explain the referendum, but to understand how the business community positioned itself with respect to Brexit and how there were splits and how these splits actually can be useful to understand the backlash from above. And especially we focus, as you may know, on finance. And so I begin with chapter 1 and very basic statistical tables, and then we will go to a more concrete discussion. But first, we analyze this database of donations. So the first surprise is that people, business actors, individuals, corporations represented in the database gave more money to leave than to remain. So if you look at the funding of the Brexit referendum, more money was given to leave than to remain, which is a bit counterintuitive because we had this idea that it was the other way around. The leave was the working class side and remain was something more elite, etc. And that's not the case. And the second observation you can make here is that of the two campaigns, the most financial one, if we trace each donation back to its sector of origin. So in the donations, we have corporations that belong to a sector, finance, non-finance, etc. And individuals can also trace back to corporations because most of them made their wealth in some corporations. And so we did this work of tracing them back to corporations and then to sectors. And if you look at the sectors that gave to leave or remain, you find out that actually the most financial campaign of the two was the leave campaign, where financial sector was gave a bit more money than the non-financial one. And the next slide is more interesting because we do the opposite table. So we check for each type of sector which sector gave to which side. And for instance, if we look at non-financial sector, we find out that they gave a bit more. So it means industry, automobile industry, EasyJet, the pub industry, etc. All the non-financial activities, they gave a bit more to the Remain campaign than to the Leave campaign. And for the financial sector, it's the opposite. Financial sector actors gave more to the Leave campaign than to the Remain campaign, which is instructive. And also what is instructive is the overall amount of numbers, where in the UK, apparently, financial sector give almost as much money as non-financial ones, which also gives an idea of the importance, the significance of finance in the UK. But then when we look at these figures, it gives us only it gives us only a partial vision of things, because we have 65% versus 35%. What does it mean? So why do some financial actors support Brexit? Why do some financial actors support Remain? So we try to really focus on this issue of finance and what finance wants for the UK, for politics in the UK, what are the splits within the financial community in the UK, and we try to explore these figures. And so to do so, we made a table that aimed at explaining really these figures. And so we looked at the database, and we made a distinction between two groups. I will explain a bit later the names of the groups. So first wave finance on the left and second wave finance on the right. So first wave finance, actually these are groups that are more traditional, that emerged earlier than second wave finance, as the name says. So you find investment banks, you find institutional investors like pension funds, you find insurance companies, market information companies like Bloomberg, for instance. And in second wave finance, you find actors that are more recent and mostly that are investment funds. So hedge funds, private equity funds, quantitative trading funds, real estate funds, infrastructure funds. So all what some people refer to as alternative financial actors. And so we made this distinction to try to explain a bit the numbers we had. And so next slide, please. And so actually, these figures explain quite well the numbers. So the first striking thing is that first, the most traditional actors, in the case of Brexit, gave a very small amount of money, £3,500,000, compared to second wave financial actors who are more recent and actually less well known. If you know British financial actors, you probably know the Lloyds Banks or Barclays or actors like this who would be in the first wave finance part, but you don't know Capital OD asset management or big private equity funds that were funded in the UK in the past 2 or 3 decades. And yet this latter group gave more money. And when you look at who they gave to, which side they funded mostly, so for the first wave finance, they funded Remain very predominantly. And for second wave finance, they funded Leave in a quite strong way as well, so around 80%. So we found out a distinction that we thought could be interesting to explore and to see further what it involves, what it implies. And so that's what we do next. Next slide, please. Yeah. And so then we try to make a history, a small history genealogy of British finance, and we try to build and to understand this conflict that has been revealed by the Brexit referendum, but that has been actually going on for longer, and that is still going on actually in today's politics in the UK. And so we try to see how finance is actually a double-headed sector in the UK. And so next slide, please. And so to understand this and to understand the distinction between these two financial sectors that we show are existing in the UK and that are struggling with each other, especially around the issue of Brexit, to understand this, we need to go back to what we call the first wave of financialization. So this was the time when the first actors, the ones on the left of the graph of the table, emerged. So this was what was called the financial Big Bang of the Thatcher era in the late 70s, early 90s, with all the deregulation or so-called deregulation movement that actually, and we explained that this financialization movement gave rise to actors that revolved around stock markets. So this was really the boom of the stock market. So you had the increase in the financialization of large industrial companies that were listed on stock markets, on the FTSE, and you had in the same time a big provision of capital to stock markets through the financialization of people's savings, through the creation of pension funds where people's money was to be invested in stock market, through the financialization of insurance where life insurance money would be invested as well on stock markets. And so this was really a decade where new actors emerged that revolved around financialization of large industrial companies and stock markets. But that was not the end of the story. Next slide. Oh, yes. So I should have cut the first paragraph. But, well, then we show that we know this less well because there was not a charismatic and emblematic neoliberal counter-revolution with Margaret Thatcher that happened, but we knew we had a second wave of financialization happening in the UK with that emerged. Some actors created their structures in the 80s, but it really had its golden age in the 2000s and 2010. So here I put a picture of James Goldsmith, who was actually one of the, you probably don't know him, but he was one of the founders of the first British private equity fund, so really an actor, one of the sectors of second wave finance. He was a founder of this, and he was also incidentally the founder of the referendum party in the 90s, which was the first pro-Brexit party. So of course for us, that's an interesting figure. But there are many other actors in different sectors that created investment funds that aimed at financializing new areas of social life. So we said first wave finance was about the financialization of large companies, and second wave finance was about the financialization of other things beyond this. So for instance, if you take private equity funds, PE funds, you talk about the financialization of non-listed companies, private companies, companies that are not on the stock exchange, so small and medium businesses. If you think about infrastructure funds, you talk about the financialization of infrastructures. Real estate funds, same thing, the offices and houses of anyone. So that's what happened later. And the interesting thing is that already with this characterization, you see that you have competing political interests between these two groups that seem to emerge. On the one side, you have actors that revolve around stock markets and that operate on large corporations that have already been financialized in the 80s. And on the other side, with second wave finance, you have actors that are on the forefront of financialization and that deal with issues of regulation. If you think about real estate funds, they deal with issues of housing regulation. If you think about infrastructure funds, these are funds that need public utilities to be privatized, so as to have infrastructures actually to buy and to exchange. And so you find actors that have different political interests. So next slide, please. And so the second interesting thing is that we try to understand why these two sectors clashed around the question of the EU, and that's actually where this distinction of business models and political interests resulted in a political opposition. So if you think about the question of the EU, you find an interesting feature, which is that second wave finance has become quite significant in the UK over the past decades. In the previous slides, I wrote that it was it had assets under management that equated to 10% of the overall assets in Britain, which looks small, but which is quite big compared to other EU countries. And in other EU countries, if you accept Luxembourg and the Republic of Ireland, which are a bit strange countries, if you accept this, actually second wave finance is quite a small player in the field of finance, and first wave finance is really dominant. And so we try to study how this opposition in business model crystallized in the case of Brexit. And we highlight two elements. The first one is that post-crisis regulation occurred after the 2008 crisis. Actually, it was quite favorable to finance overall, but it was not equally favorable to both sectors, both kinds of sectors after the crisis. And as you can expect from this map, first wave finance at the EU level were able to lobby more efficiently than second wave finance, which were just located in the UK and the Republic of Ireland and Luxembourg. And so second wave financial actors considered that they had been left out, discriminated against, let's say, during the post-crisis regulation compared to first-wave financial actors, so big bank, investment funds, investment banks, that managed to defend their interests well and actually to expand and protect their businesses. And the other thing that we look at in terms of the arguments that crystallize around the issue of Brexit is also the idea that exiting the EU for these actors could be an opportunity to expand deregulation to new areas. So first-wave financial actors did not really engage in these types of discourses because they were happy with the status quo, whereas second-wave financial actors really thought that it was needed, because they are at the forefront of financialization, it was needed to expand environmental real estate deregulation in many areas. And here you see Crispy Noddy, so I try to embody a bit the book in figures, and Crispy Noddy is one of the founders of the Brexit campaign. He's a hedge fund manager, and he has a newsletter where he says to his investors his view on the world quite regularly. And so in 2015, he made a very interesting newsletter for Christmas or the New Year, where he said to his investors that they needed a new Thatcher, a new deregulation movement to get rid of environmental and regulation in other areas. And so he embodied really this political claim of second wave finance. And so, next slide, please. And so here it was really the explanation of this conflict between these two sectors. And now in the last part, we try to go to the relationship between these two sectors and more broadly the UK accumulation regime. Next slide, please. So we try to go from an analysis of financial sectors to the analysis of what we call the political accumulation regime. So it might look like a quite jargon, a quite complicated concept, that we just mean the political institutions that allow economic actors to accumulate, to make profit, to make business. And so we try to by a political accumulation regime, we include all the political institutions of a country. So the constitution, even if the UK does not have a formal constitution, but let's say constitutional customs, parliamentary law, the divide between the Conservative Party and the Labour Party, the media environment. So all these are political institutions, and we try to see how this conflict between these financial sectors, beyond the issue of Brexit, gets translated, gets embodied into the British political accumulation regime and actually rewrites, reshapes the British accumulation regime. And we explore several topics, but I will focus on one topic that I find interesting and also easy to develop as a presentation, which is the issue of think tanks. So think tanks clearly are one component of the British accumulation regime. They generate ideas. They are also places where future ministers come to write papers and express what they will do and they will rise to power, etc. And what we see very clearly is that all around the 2000s and especially the 2010s, you have the emergence of new think tanks. So historically, you have lots of conservative think tanks. You also have labor-winged think tanks, but you have lots of conservative think tanks. But in the 2010s, you see the emergence of new think tanks that, for most of them, are funded, among others, by second-wave financial actors. So, for instance, the Legatum Institute, which is one of these think tanks, is funded by a hedge fund called Legatum Capital. And there are many other examples of this where a think tank is funded by an investment fund, a hedge fund, a private equity fund. And actually, this new galaxy of conservative think tanks was given a name by the British press. So it was called the Tufton Street Network that you see here. It was given this name because most of these new think tanks that were emerging and that were defending, promoting other ideas, political ideas, were located in Tufton Street, which is a street in Westminster, which is, and actually at a very small place in Tufton Street, at 55 Tufton Street, which is this building, which is very nice. And so they were somewhat flat sharing this building. And so you have the Global Warming Policy Foundation, which is not, which is quite climate denial think tank. You have the Taxpayers Alliance. You have many other think tanks. And so we try to explore how not only second wave finance supported this network, you find other funders from various places, from the construction industry, from the oil industry, from the tobacco industry, from also more standard industries like airlines or things like this. But you find a strong component of second wave finance. And so we try to explore the ideology of these actors, the ideology that they create, because these actors, if you think about them, they translate the interests of their funders into ideas, into the political sphere. And so that's where you find economics being translated into politics, and we identified 4 components in the ideological construction of these actors. Libertarianism, so what I talked about earlier, the idea that British people need a new round of deregulation in many areas that create red tape, prevent businesses from doing money, etc. The second idea is that we need also a somewhat authoritarian turn. So these are actors that publish reports who explain, for instance, that climate activists should be treated as terrorists. So you have papers by, I think, the Institute of Economic Affairs, where the person who wrote the paper said that Extinction Rebellion should be criminalized and treated as, their actions should be treated as terror offenses. Euroscepticism, so this was strongly and and quite unanimously anti-EU sphere, and climate denial. And you see here the centrality of the Global Warming Policy Foundation that was quite strong in trying to promote adaptation over mitigation, criticize the way the IPCC calculated its projections, etc., etc. And of course, there are other intermediaries that play between these financial sectors and the accumulation regime. And you could think also about the conflicts within the Conservative Party, where you find similarly new wings of the Conservative Party emerging and struggling and fighting with already existing wings in recent years. And you can just see the Liz Truss government, for instance, which was quite a good example where we saw this new wing arriving in power and struggling with previous dominant actors in the Conservative Party. Next slide, please. And so we explain, and so that's quite an abstract table, but it's actually the masterwork of the book, so I really wanted it to be there. But we explain that actually these actors, these second wave finance actors, they coalesce with other business sectors to promote a new accumulation regime and to promote a shift away from the neoliberal accumulation regime that had been dominant since the 80s in the UK, and that are promoting the emergence of what we call an authoritarian libertarian regime that promotes the expansion of financialization to new areas through an authoritarian turn. And we detail this more in the book. Next slide, please. All right, and so I conclude briefly on the idea that actually we've studied the UK and we've begun with Brexit, but we've tried to go beyond Brexit a bit. But we could think about similar cases in other countries. For instance, we could think about the US. We did not do the study on the US, unfortunately, but if you look, for instance, at electoral donations at the time of the election of Donald Trump, you remember that Hillary Clinton was said to be the Wall Street candidate. And actually, when you look at open data donation databases, you find that if you look at specific sectors like hedge funds, private equity funds, they donated in 2015 strongly to Trump and not to Clinton. And similarly for Bolsonaro, you had the whole Sao Paulo financial hub supporting him. Actually, we don't know it from databases because they are not public, but you can see it from the financial newspapers in Brazil. So you have similarities between this case and other cases. And since the publication of the book, since the writing of the book and its publication, of course, things have changed a bit. The populist moment, so to speak, to use a concept that I don't endorse, has receded a bit because Trump has lost, at least for a moment, and Brexit has been passed, and Liz Truss, who embodied also a bit this, and Boris Johnson have been crushed, and Bolsonaro is in Florida doing I don't know why, and so that's this has changed. So the question that I would like to ask as a conclusion is it over yet, or does it continue through other ways? Is it also something that we observe in other sectors? So I know Reiser, for instance, knows well about the tech sector. I would be curious to know what types of distinction we can find in this sector. And also a reflection I have in recent times is, are we seeing the rise of second wave finance in the financial sector as an emerging group that tries to rise to power and that will at some point manage to get power to launch this new deregulation cycle for good? Or are we seeing more an open-ended struggle between traditional dominant financial sectors that want to maintain the neoliberal status quo, so to speak, and a type of reactionary right-wing business community that is here to keep in check the more dominant sectors, and who tries episodically to provoke a new wave of deregulation, to provoke a reactionary shift. So how stable is the state in which we live in this respect? That's a question I wanted to ask to conclude.
And please join me. Thank you for your research and thank you for sharing it with us. in the final chapter of the book, you urge the readers to study the faces of the enemy. So I want to start by taking a look again. Who are these men?
So I think it's Robert Mercer.
Okay.
Right? Yeah.
I don't know. It's not a quiz. And the next one.
So I think it's So I know. So that was Robert Mercer, I think, who was the CEO, founder of Renaissance Technology, and who supported Trump quite significantly, and which was a hedge fund actually with a quantitative approach. And yeah, I could talk
more about
minutes for minutes about him. And yes, the next slide is Jacob Rees-Mogg, which I find is a very interesting type of person because he is both. He represents the British establishment. I think he has a nobility title. I don't remember which one, Count or something. And yet he's also the founder of a hedge fund which is called Somerset Capital, and he's also an MP from the constituency of Somerset. And so he mixes a bit all the types of upper class aspects, and also in this picture he displays it, and so you see him taunting his opponents in the parliament. Yeah.
And we have a third man. No, we don't. I was wondering, how do these men differ from these men? And we're looking now at the picture of the Mont Pelerin Society.
Yes, so this is the Mont Pelerin Society. Actually, that's a good question, because the issue of the link with neoliberalism is really strong in the third chapter of the book, but yet we don't have really a theoretical definition of neoliberalism, in the sense that we don't define it in the same way as other people. I don't know if you're all familiar with, but Philippe Mirowski or Michel Foucault would define neoliberalism by looking at the texts of neoliberals and thinking, okay, actually neoliberalism is about what Hayek said in this period of his life, or what I don't know, I don't remember the name, but
Friedman or
yes,
Karl Popper?
Exactly. And so actually we try to adopt another definition of neoliberalism, which is more the definition of David Harvey, who published a few years ago a brief history of neoliberalism, and who opposes neoliberalism as a theory. So he said that's a theory, there is a theoretical component, there is this corpus of text, and then there is a neoliberalization movement that occurred in the 80s that was embedded into specific institutions, and whose aim, he explains, I think I quote him quite well, quite literally, was to restore the domination of the business class over social life, or something. He said something like this. And so where he specifies and he says that when the neoliberalization movement opposed to the neoliberal theory, actually the neoliberalization movement won. So if Hayek's theory says that we should not do the war in Iraq, for instance, but the neoliberalization movement, the interest in restoring the domination of dominant classes, says that we should do the war in Iraq, or that we should suspend the US participation to the WTO, then that's we'll do the war in Iraq, and we will suspend the WTO-based order. And so we try to build on this, and actually many people tell us that libertarian authoritarian, it's an oxymoron, right? That it's oxymoronic in the sense that libertarian is supposed to be opposed to authoritarian, and we say that it's really not a problem, because what happens is not a theory-based shift, but more a shift in terms of advancing the interests of some sectors that are rising, that become to be more and more dominant, and that they in order to do so, there are intermediaries, ideological intermediaries that pick ideological components here and there and try to articulate a thought, and they are supported.
And in what way are they ideology? In what way is it a real ideology, or is it just personal gain or profits? What those other men were into?
The Mont Pelerin people?
No, the other men. James Goldsmith.
I think Yeah, when you look at James Goldsmith's books, for instance, it's interesting because he has really built a party in the UK. He had got MEPs elected. He was himself elected as an MEP, and he published many books about his ideology. Mm-hmm. And you find, so it was in the period of the end of the USSR, so you find a strong anti-communism, but you find also very pro-deregulation things, and also he's also very much in favor of traditional family values and patriarchy and these kind of things. So you find a strange kind of mix, and I think we are not isolated in trying to describe what's happened with these people in terms of a strange mix. I know also Wendy Brown, UC Berkeley professor, who described the current alt-right, right-wing emerging ideas as, yeah, I think she talked about Frankenstein or something like this. So that's we completely agree with this on this respect.
And what do you think their end game is?
Their what, sorry?
End game? How do they want the world to look like?
I haven't understood the word.
How do they want the world to look like? What is their end game?
Oh, their end game. Okay. I think a world where the interests of their sectors are more represented than they were before. So I think we are really slightly Marxist in this respect, so that we think that they are determined by their interests, and they want the sectors that they represent, so second wave finance, hedge fund, private equity funds, etc., to be able to make business more easily and accumulate profit more easily, and to do so they believe that they need not only to reshape financial regulation here and there, but that they need to reshape more broadly the political regime of the UK, because at some point, if they are in the EU, which is a kind of constitutional embedment, they can't ask for this type of financial regulation. So they need to get out of the EU, and if they have this very open British parliamentary law, they can't pass these types of deregulation law, etc. And so they need to change this, and so that's, in short, they try to advance their interests. And I think that their vision of the world is fitted to this and is determined by this. So
in the end, who profits? Only the rich, or?
In our case, yes, I think I think the shift we are describing, we don't want to remove social movements from the story, or the fact that actually indeed for Brexit you had some working class people who supported this shift, but in the story that we tell, we see the rise of new groups that tried to rise into power, who were challengers from the perspectives of the field of finance, so that were new sectors that were not existing before. But when you look at who they were, so for instance, we saw Jacob Rees-Mogg, who is a hedge fund founder, but he's from a very wealthy upbringing. We also saw Chris Pinodi a bit before in my presentation. He's the founder of a hedge fund, but he was before that also a very wealthy man who went to Eton and to Oxford, and whose, I think, grandfather was an industrialist in the 20th century. So I think these are upper class people who found new financial sectors to find new ways to accumulate, and that's what we try to describe.
Thank you. I want to welcome our next speaker on stage, Rayer Hendriksen. He's a financial geographer, political economist, and postdoctoral researcher at the Vrije Universiteit Brussel. In his research, Rayer has explored the long arm of finance, the financialization of governments, and the historical origins of the integrated European financial space. A warm welcome again.
Thank you. Thanks for inviting me. It's great to be here with Théo. I saw him last year presenting his English edition of this fantastic book. So I'm happy to engage with him on this platform. I will cut down my talk a little bit because Théo perfectly explained, obviously, his argument. But for many who lived through the 2010s in disbelief, not buying into media narratives of political insiders and their billionaire backers selling that as disruptive outsiders, Marlène and Théo have written the ultimate antidote. And well, here I explain, you know, what they did. Théo did it, but I think they are like myth busters. One myth they bust is, you know, and I quote them, "The winners of globalization were not defeated by the losers. The Brexit referendum pitted winners against winners." And I think this is a perfect quote because we've also, in the Netherlands, we live in this idea that, you know, the normal Dutchman is fighting the elite and what have you. And we're still swimming in these type of narratives. And this book is a perfect kind of antidote to this nonsense. Consequently, the authors go from fact-finding to contextualization and interpretation. And first they historicize the rise of first and second wave finance in the EU. And subsequently, they describe a larger swing in Britain's capitalist accumulation regime. I will keep my reflections short on financial history because there's not much to disagree with. Indeed, second wave finance grew to prominence since the 2000s. And the financial crisis was a watershed moment as EU policymakers sought to tame the excesses of Anglo-American finance, which they first imported into Europe and then sought to tame. And then second wave finance, as they described, the dominant class in the UK indeed became kind of a dominated class in the European Union. And then the authors note, faced with a neoliberal political regime of accumulation that no longer protected the institutional arrangement they thought was needed to ensure them increasing profits, second wave financial actors found a potential way out, a change of political regime. Breaking with, and I have to emphasize, breaking with neoliberalism and opening a new wave of deregulation. Now, if we fast forward to today with Brexit done, whatever that means, the authors note, in the past 5 decades, British capitalism has gone through 3 successive political regimes of accumulation. Can you put up the meme case? Yeah. So you stare at this a little bit, and I will try to explain this later, yeah? 3 successive waves of political regimes of accumulation. First, the Fordist regime. They were also configured around the financial sector. The financial sector was specifically configured at those times, in those phases. First, around the Fordist regime, with a strong redistributive welfare state and a financial sector dominated by banks. Then came the financialized regime, first wave finance, based on a regulatory state in which finance was mostly concentrated in stock markets. And then, today we see the emergence of a new financialized regime based on an increasingly authoritarian state. Social and civil rights are restricted and alternative financial actors are able to profit in markets that were not financialized up until now. Keep this in mind. Then the authors develop a larger explanation in the third chapter titled From European Neoliberalism to Authoritarian Libertarianism. And here the authors enter a crucial debate that has only grown bigger since. And this is the question of post-neoliberalism. And speaking of shifts from and breaking with neoliberalism, the book can be added onto the pile of experts declaring neoliberalism over, dead, and what have you. But although we can certainly see a mutation whereby the shift from first to second wave finance reflects a larger shift from, say, corporate technocracy to more shadowy oligarchy, the question is whether this is indeed a shift from neoliberalism, or maybe it's better viewed as a mutation within neoliberalism. Say from European ordoliberalism to another more radical libertarian variant, not outside but residing in this neoliberal family. Libertarians have been part of the neoliberal family since day one, with Ludwig von Mises as one of neoliberalism's founding fathers, or more radical libertarians like Murray Rothbard, a far-right paleo-libertarian, He also has been part of the neoliberal thought collective of the Montpellier Society since the 1950s. And the authors themselves also note it's sometimes hard to draw the line between libertarianism and neoliberalism. The thinking of the neoliberal economist Friedrich Hayek grew more radical over time and took a libertarian direction. And indeed, actually existing neoliberalism has, by design, also grown more radical over time. It cannot do anything else because, it systematically demolished democratic oversight over economic decision-making, hollowing out liberal democracies, and then with, leaving centrist parties to rule the void, as Peter Mayer called it. In this sense, today's radicalizing centrist parties increasingly embracing libertarian positions are merely continuing the same kind of process, seeing, and I quote again, public liberty sacrificed for the sake of the protection of the most essential of all liberties, the freedom to own and accumulate. And this mirrors what I have called neo-illiberalism, whereby neoliberalism grows increasingly illiberal in the political domain to shield and accelerate the economic gains, the material interests. And I argued in 2018, instead of undoing neoliberal globalization, political illiberalization might shield the economic core of the neoliberal project from popular resistance, effectively functioning as its toxic protective coating. And indeed, the authors also note, while the regime is libertarian on economic issues with a lot of economic freedoms, it's authoritarian on the political issues with less and less freedoms, less rights, and so forth. So there's a lot of common ground between you and me, and rightly so, but I think we diverge on the matter of whether this constitutes a break with or a mutation within. For even supposedly centrist liberals like Macron or Rutte increasingly embrace political liberalization and repression to maintain order within the EU, within European neoliberalism. And where the likes of Adam Tooze and Branko Milanovic have recently joined Marlène and Théo, declaring neoliberalism over, I would follow historian Quinn Slobodian, who Théo also mentioned, who recently argued, insofar as it exists, it is helpful to think of post-neoliberalism not as negation or reversal, but as building on top of institutions, incentives, and idioms that neoliberalism has already put in place. Less antithesis than synthesis. And here comes in the metaphor. Now this is the world of Pokemon that's even more complex than neoliberal history or the contemporary status of neoliberalism, but also a lot of families. But this is the favorite Pokemon of my son. It's Gengar. And the quality of some of these Pokemons is that they can mutate or evolve into something stronger. They gain capabilities and they grow into something else. And I think we can project this on these phases identified in UK finance, but I think you can also project it on neoliberal history, where ghastly stands symbol or symbolizes proto-neoliberalism, so the idea factory in the Swiss mountain. Hunter that becomes bigger, stronger. Keynesianism fails, the moment to implement actual neoliberal policies arrives. And then it, mutates or evolves into Hunter. So implementing neoliberalism, first at gunpoint in Chile, but then Reagan, Thatcher, and the rest. And then maybe, just maybe, the moment 2016, Brexit, Trump, etc., is when Hunter evolved into Gengar, becoming stronger, having more material capabilities. There's more, income inequalities. Big corporations have grown bigger. Private equity have become bigger. And they again evolve into something stronger. But within this same type of family. So not a break with, but, within. Okay, in closing, let me briefly reflect on the relevance of this fantastic book for the Netherlands, with the recent provincial elections having been framed in very familiar terms. It's a recycling of this dominant Brexit narrative, outsiders shaking up the status quo. In this case, the farmer-citizen movement, Boer-Burgerbeweging, which is an astroturfed party linked to big agricultural capital. But as was the case with Brexit, I'd argue that the status quo itself has fired up its own resistance to maintain and deepen its own rule. Yet despite all the evidence, even supposed leftists like Ewald Engelen continue to draw sharp divides between neoliberal center and the supposed discontents, speaking in the New Left review of an unexpected wave of peasant protest. Rich industrial farmers are not peasants. Suggesting that the government was caught off guard by the backlash and that it all constituted a revolt against technocracy. But instead, mirroring the vote for Brexit, for Trump and many others, I'd argue that it is the status quo revolting against itself to radicalize itself. As argued by Roxane van Iperen, a columnist here in the Netherlands, the electoral success of the agriculture industry represented as a victory of the normal Dutchman, de normale Nederlander, completes the identitarian smokescreen. This victory is not a protest against Rutte, but it's the product of Rutte. And I think that's correct. For the Rutte government threw in some legislative red meat into the political arena to reduce nitrogen levels, stikstof. A handful of agricultural multimillionaires and billionaires, neoliberal winners, have been doing the bidding for BBB, the Boer-Burgerbeweging, similar to the handful of rich men Théo talks about, backing Leave. Bankrolling resistance, filling the country with all these inverted flags, slogans like no farmers, no food, and what have you. Whilst media force-fed these narratives, they really force-fed these narratives. So to frame BBB's electoral success as unexpected, being caught off guard, seems politically motivated rather than reflecting reality. This was Groundhog Day. It was completely and utterly predictable. Through the interplay between a radicalized centrist government and BBB's resistance, the Netherlands has aligned itself closer to let-it-rip mentalities guiding the Tories, guiding the US Republicans, when it comes to climate change, and the same can be said about COVID. Théo has written a fantastic article on UK pandemic management, which very much mirrors the Dutch strategy, where Rutte again relied on mass-mediated far-right resistance in order to look prudent. So there's no shortage of ongoing and future events being framed in a similar fashion. Ron DeSantis will announce his run for the US presidency on Occupy Twitter tonight, where the world's richest man moonlights as a freedom-fighting underdog. And not to mention Trump himself, set to demolish DeSantis as an ultimate kind of outsider, no matter that the status quo has wasted no opportunity to mainstream his antics. So I think there's much more to say, of course, but I'll leave it here. Koop dat boek. Thank you.
Thank you so much, Rijer Hendriksen. I think, yeah, please, over there, join us. And plenty to unpack. Before we do that, I want to welcome our third guest, Johan Helbron. He's a prominent sociologist and scholar known for his extensive contributions to the field of sociology, of culture, economics, and democracy. Professor at prestigious universities in Uppsala, Paris, and Rotterdam. Please join us. Johan Helbron. So before we also talk about the BBB and all the other interesting things you said, I want to start by you, Johan, because we heard two things. Théo talked about the shift from neoliberalism, and Rijer talked about a mutation within. So where do you stand?
That's not so easy to answer. I would say that the main questions that are, thanks to this book, are on the table are more important than the question you just asked me, which is about terminology.
Okay, then I'm going to ask you. Are you still think it's a real different system, or it's a mutation within?
I would begin with a remark on the Pokemons, which I think is an interesting metaphor, and yet I think when Pokemon evolve, as you said, they become stronger and stronger. And I think the dynamics that we try to show is to the opposite. Neoliberalism finding difficulties in increasing its level of accumulation, and so that the main constraint is to provide new ways of accumulating once already existing one have been exhausted, and somewhat it means that the Pokemon somewhat has also got weaker before mutating. So that was a remark. And then the neoliberalism concept, I have to say that I discovered it when we met, which was when the UK translation was out, and I was desolated not to have read the paper before. And at first I thought, okay, actually he says the same thing as we do, but 3 years earlier. And fine. Then now what you said here, I thought that. It's also it could be an interesting way to articulate, for instance, what is going on. At the end of the book, we try to explain how previously dominant forces, the forces of neoliberalism, first wave finance, somewhat end up coalescing with the new hegemon, with the new rising forces. And actually, it could be a nice concept, the opposition between neoliberalism and the one we have, libertarian authoritarianism, to describe also how, for instance, you can see a realignment from the inside of the EU. You can see a realignment from centrist forces with Macron adopting authoritarian policies. So it could be useful to describe two ways of transformation that we can see. And that's all I have to say. So yeah.
Don't you think it helps us to talk about two different systems?
I think it would be very valuable to ping pong a bit more about the many overlaps in our analysis, but then these slight differences in terms of, okay, well, is this really new or not? I think the question cannot be decisively answered in this moment. Like, even if, neoliberalism had its day, we still live in a very neoliberal world. We still have to work with it. Gary Gerstle also wrote this book last year about the rise and fall of the neoliberal order. And he also argues that the neoliberal order is broken, but we will live in the remnants or the vestiges of neoliberalism for years, if not decades to come, right? So in a way, it sort of doesn't really matter. Is it still alive or not? It's kind of it's like a Schrödinger's cat in a way. But I think it's nonetheless an important kind of question. But maybe we can only answer that in 5 years or 10. I don't know.
Yeah.
But maybe
what do you want to add to that?
I think that if there are two, perhaps, I think very significant, important results of this study. One is this mounting power of relatively new economic forces, being private equity and hedge funds. Now, and they have interpreted this as a sort of second wave of financialization. It differs in significant respects from the first wave, and I think this analysis is very useful, very illuminating. It is new, because we knew some of these individual fund managers, billionaires, and so forth. There were scandals around some of them. Cambridge Analytica, for example, central role in the Leave campaign in Brexit. And The Guardian, investigative journalists of The Guardian, revealed this scandal that behind Cambridge Analytica was Robert Mercer, a hedge fund, American hedge fund billionaire, who was also central in the Trump campaign, who was an early supporter of Trump. He was a major financier of Trump, and so forth and so on. So this emergence of these new economic powers, hedge funds and private equities, I think a very important result. Second wave of financialization is a very useful conceptualization of this. And the second important thing, so is it new, relatively new? This is, I think, a very important change. And the book reveals that this change is a structural change in the power relations. So that is what journalists usually do not reveal. They've revealed this. So this is a structural phenomenon.
Yeah, so before you go to the second one, because it's really interesting that you brought up Cambridge Analytica, is it only the money that makes them so powerful? Because the Remain camp, they also had a lot of money and investors.
Yeah, actually.
Or donations.
Yeah, no, you're right. I think we study donations really as a way to reveal broader splits within finance and broader ability actually to donate between €1, £1 that you earn and your ability to donate to a campaign and to make this campaign win. There are lots of steps, and actually the numbers only reveal, give an indication, but are not the way through which the election was gained. If you want to gain, you need to have think tanks that generate ideas. You need to have actually campaign groups with executives in these campaign groups, which have been trained over 2-3 decades in this part of the new right movements. So when you ask, is it only money that buys election? I think clearly not, but in the long run, what we try to show, especially in the third chapter, is how different in accumulation ends up driving political transformations through a myriad of intermediaries, and funding of elections being only one of them, but the most easy to observe actually empirically. And what I would like to stress as well is how the actors we talk about are quite unknown and not really very well, very public, and yet these are really places where a lot of money is accumulated these days. In the past decades, if you want to become a billionaire in the UK in the 2000s, you shouldn't become a banker, you shouldn't become an investment banker, you should really fund a hedge fund actually, or a private equity fund, and that's places where a lot of money is being accumulated. And also I think that usually statistics that talk about the overall amount of assets that they have, etc., do not reflect really this intensity of accumulation in these new sectors, and I think in the end that's what drives the ability to generate political transformations in the long run. That's this ability to accumulate a lot.
Okay, thank you. And your second point.
Yeah, well, maybe to add one thing, if I may. I think this is it just money? No. First, because the political transformation of economic interest into political mobilization, because that's what we're really talking about, is something we should take into account as, not automatically following the economic interest. So this is a work that has to be done, and the people concerned in these stories, and the US stories is similar, are relatively sophisticated actors. I mean, if you look at Cambridge Analytica, this was a pretty sophisticated campaign. Not only because they had all the money that they could buy experts and so forth and so on, but also because these are actors which realize that they represent minority interest in the population. So they have to be smart, and whereas on the left and the progressives think, well, we are in the interest of all the people and so forth, and they tend to underestimate the logic and of political campaigning and so forth and so on. And one other thing is that I think if you look, one of the results of this Piketty work and so forth is not only of increasing wealth inequalities, income inequalities and so forth, but also that the higher you get into the economic hierarchy, the more people have profited. And so now you have this layer of super rich people, billionaires or close to billionaires and so forth, 700 in the US, a similar proportion in the Netherlands, by the way, proportionally it's pretty much the same amount of billionaires we have here. And these people are very far away from simple rich people, who have 1 million or 2 million or 3 million. Now, this is something we should think about sociologically. What does this mean? And I remember seeing a cartoon in the elections many years ago where you saw a private equity multi-millionaire who was sitting on a stack of dollar bills, and he was comfortably, it was nice weather, it was in a desert, and then the quote was, well, on a clear day I can almost see the middle class. Now, so this is an interesting sociological phenomena, you know, that these super rich hedge funds, private equity. There was a study which showed a couple of years ago that in 2010 or 11, the 25 best paid hedge funds manager had earned in that year or the previous years more money than the 500 CEOs of the 500 largest firms. So there you have again.
And these men, or
mostly men,
are they also born rich, or have maybe they're also lived in a society, in a normal society, before they were so rich?
I think we don't know very much about this. I mean, if you look at this, you know, these populations and so forth, I don't think we know very much about it. Most of these people are born wealthy in wealthy families, privileged and so forth, but they have achieved, if you look at some of their careers, something way beyond the wealth or from their birth.
Mm-hmm. Theo?
Yeah, no, I agree. I think there is often this. Actually, there were some works on the people we described. Niall Flickstein, who talks a bit about the rise of private equity funds in the 90s, and there was very much this narrative in terms of the incumbents versus the already established, where actually you already saw this idea of the populist narrative. Even if Niall Flickstein is a very nice researcher, etc., but you had this idea that these were private equity people, hedge fund people, incumbents that were challengers, and that somewhat you have sympathy when you read this, that they shake up the field and they get their position. And when you look at trajectories, and so we don't do that at all in the book, but other people do it. Felix Buhlmann, other people here and there.
Yeah,
and they show that actually, yes, probably the most dominant, when you look at now who begins to do finance, who goes to work in finance, those who choose and who are able to choose private equity funds, for instance, those who have the top diplomas and who overall come from the highest backgrounds. And so that's interesting to note. And also I wanted to react on what Johan said on the fact that they went far beyond their upbringing. That's true. And somewhat these are people who have been surfing on a trend, also the development of their sectors. They have been here at the right time, at the right place, when these sectors were just emerging, and they have been able to mobilize important resources that they had, and they have been surfing this wave and had an enormous amount of wealth given their work, even if sometimes they worked hard to get this, but compared to people who worked in other financial sectors and worked hard as well, but were on the losing side of history in this case.
Yeah. Rijer, before I go to another topic, I think you wrote some stuff down, or do you want something to say on these things?
No, I was just thinking that the shift from first wave finance to second wave finance is perfectly described, and it's also an established kind of idea. I think social studies of finance and see the rise of these new actors. I'm just thinking that the period studied here, and the financial crisis being a watershed moment, making second wave finance realize, okay, we have to escape this regime. I think we have to realize that the decade since the crisis was a decade of very low interest rates, with very much liquidity, with even probably first wave financial actors shifting money to second wave financial actors to accumulate. Yeah. And maybe now in this conjuncture with rising interest rates, we see that banks become more profitable. The first wave is now maybe winning again. And maybe investors in the second wave, venture capital, are now more under pressure. So maybe that's something like maybe this was also a moment of the 2010s that maybe now is also over for the time being.
Yeah, that's the question. Is it over yet that you asked at the end of your presentation?
First wave finance is still winning. Or winning again, I don't know, you know?
I think there are two elements. The first element that you emphasize is how in recent years we've been in a period of central bank funding of the economy, with very massive amounts of liquidities being injected and injected through, and this benefited to some institutions, and this led many people to talk about the fact that we would live, because of central bank intervention, because of other actors we haven't referred to, but BlackRock, etc., in a kind of monopoly capitalism. And I think that's in the end the argument that clashes quite strongly with ours, because we highlight actually quite different narrative, that we don't go towards monopoly capitalism, but we go towards quite the opposite, and that's a bit a friction here that we would need to reconciliate. And I don't have the solution actually, but I'm just saying that it's true that it's an issue. And then the fact that second wave finance is on the loose, at least politically. Their representatives have quite lost some elections in recent times, and they have become less prominent. And I think that in the book we have this very not apocalyptic, but not teleological, but let's say we describe a perspective that could happen soon of the victory of these actors, and we say, okay, be concerned, it was in 2021, be concerned they could win, and it could result in this deregulation wave, and that's what is behind what we call usually populism and Brexit and these kind of things. And in the end, I think that may be more complicated with this balance between not only resisting, but actually still dominant first wave financial actors, and these challengers that have a lot of resources, that accumulate a lot, but that somewhat, it could be a functional order where the both would coexist for some time, and there would be periodic changes of tack, and actually it would be the worst of.
And are there already some things that came true?
Sorry? Yeah.
Were there already some things that came true? Because you said you already wrote down some future things that might happen. You mean if we have further works? Yeah, I think Marlène and I have different perspectives on the future things that we want to explore based on this. I think Marlène wants to explore other sectors and other countries and try to expand the argument for other national situations, whereas I am more inclined to explore more the financial relationships between these actors. I just talked about BlackRock, etc., that we don't really evoke in the book, and making the political economy aspect of the book more subtle. So we have a bit diverging projects, but I think, yes, definitely there would be further research on this. Okay, let's talk about two things that Dreyer talked about in his presentation. Narrative, the narrative of the mass against the elite. Why is this narrative still here? There's so much research against it. What do you think, Johan?
Well, I think the book really raises a very important complementary perspective to this whole debate about populism and so forth. I mean, it is very clear that in many countries there's a decline in the trust in politics, in the establishment, and so forth and so on. So this is a clear tendency, widespread, important. The question is, how do political forces react to this, right? And I think on the left, the reaction has been very poor, very deficient, lacking any serious engagements with suffering of people, various groups, and so forth. And on the right, it's been pretty sophisticated, actually, how they have tried to turn discontent into their political favors and so forth. And that's actually, in fact, this whole political dimension, it's one of the important things of the book, that it shows, because it was about the financing of the Brexit, that it's very important, it's essential to go beyond economic studies of inequality. I mean, the Piketty group has been doing tremendous work, extremely important and so forth, but when most of it remains in terms of the 1%, the 0.1%, and these are statistical abstractions. And so it's a force of the book that they actually, okay, but what are we talking about? When you talk about 1%, what are we actually talking about? What groups, what organizations and so forth?
So we don't explain it good enough.
No, no. And for understanding the consequences of these rising economic inequalities, you have to study the groups behind it, how they organize themselves, the political dimension, and also indeed the ideological dimension, because they talk about these think tanks. It's a very important aspect of the whole transformation that the book explores, analyzes, and so forth. So go beyond merely economic analysis of these phenomena is, I think, vital. And sociologists, I mean, you are a sociologist, I think sociologists should do much more about this. Well, not only sociologists, but geographers and political scientists also, of course. And some of them do. But, I mean, the book shows the importance of this.
Raya, what do you think? Do you share this analysis?
Well, I don't think that the left was quite disappointing of the populist decade. I think there was quite a bit of initiatives. Theo explains it in the book. 2015 was also a very hectic year. Like the first half, it was a Janus-faced year. Like the first half of 2015, you had Syriza in Greece. You had, I think, Corbyn and Sanders kind of started to appear on the stage.
Refugee crisis.
Yeah, but that was in the summer, like before the summer, and then there was this sort of coup with the referendum in Greece. Universities were occupied, also here in Amsterdam. And then you had the migrant crisis, and then before the summer, the EU was really depicted as the neoliberal institution par excellence, undemocratic. And then after the summer, you had the migrant crisis, and then the EU became kind of framed as a politically correct institution trying to save all these helpless migrants, and that's where Brexit came and Trump came, and it's kind of changed. And I feel that the kind of societal frustration was kind of put in front a different kind of political project, and obviously that I think in 2016 showed that it kind of worked. Because I think Brexit and Trump built on the same kind of frustrations that the left also sought to tap into. But yeah, I mean, there's very asymmetrical power relations between the left and the right, of course. The left doesn't have so many think tanks and what have you. And then, Corbyn really came close. 2017 elections was kind of a surprise, but then, yeah, he was also kind of purged, of course. I mean, what you see now with Keir Starmer, it's just embarrassing. He's also still moving to the right. But I don't think there were initiatives.
Yeah, sure. Yeah, but I mean, no, there were, and indeed some were quite remarkable. Bernie Sanders in the U.S. history is a quite remarkable phenomenon. He was perhaps the one who came closest to a sort of massive mobilization of the left and so on. But nonetheless, I mean, I think the left is not doing too well, and
no, that's sure.
and perhaps one of the ingredients in this is it's also to come back to the book. It's a lot of praise, but I have also some
it's
questions.
A good book.
But I mean, I have a lot of I think it's an important book also. Also because this is a very good example of public sociology or public social science. So it's social science, it's good social science, well-crafted research and so forth, but it's public sociology. So it's a book, it's accessible, it's well-written and so forth and so on. Not so much within the academia, in very specialized journals and so forth, but it's a book for the public debate and for public movements and so forth. In that respect, there social scientists and others have a way to go.
So now everything's going to change.
Yeah. I mean, in the US, for example, there has been a debate about public sociology, Michael Burrow. It's remained an extremely academic debate, very abstract. In France, the situation is rather different. I mean, there's much more political social science than in most other countries. I think here in the Netherlands we can learn something about this as well, you know, not just the content of the book, but also this very phenomena of public social science is extremely important.
Yeah, I agree. And to talk about the political movements and the perspectives it draws, I think, and you were asking a bit before, why did this narrative stay and why couldn't we challenge it, and why this small minority managed to impose its rule to big decisions like this. And we shouldn't underestimate as well that these actors we refer to, they have really a minority with them. They represent a very small proportion of the population, but they are able to build coalitions. And you can think, for instance, if you think about real estate funds, you could also think about the coalition they could build or they can build with house owners, and how a sociologist a few years ago, actually a geographer, Brett Christophers, published the rentier capitalism to talk about the UK, how the UK would be a rentier economy populated with rentier in many sectors, house owners being the charismatic figure of the rentier, and actually house owners could actually very well coalesce with some of the investment funds we describe. And in the same time, in the tech sector, you have many people working in the tech sector. I've been in London, in Dublin, in other countries. And these people could actually very well coalesce with venture capital funds, which are private equity funds, part of second wave finance. So you could think actually about coalitions that won't represent 50% of the population, that won't even represent 25%, but that will represent still 10% of the population, 15%, and that affect the political debate. And so they are not just alone with their bunch of money and banknotes, etc., trying to change election, but they can coalesce with some groups. And I entirely agree also on what you said, both about the political recent history and also Corbyn's manifesto in 2019 was quite, well, he lost miserably, but when you read the manifesto, it was quite impressive. There was, I think, the nationalization of 15% of all the stock of big listed companies, which, when you think about it, it was really radical and yeah, it's...
Okay. This is something really interesting in your book, which you don't develop, and I think you should develop it more. These alliances that you have around private equity or hedge funds with, for example, real estate, big real estate funds. And there are very good examples, like Blackstone, you know, not BlackRock, Blackstone, Simon Schwartzman, also one of the great funders.
The one here in the Netherlands too?
Sorry?
Blackstone, is that the one here in the Netherlands?
Yeah.
Everywhere.
Blackstone has moved massively, so this is originally a private equity fund, massively into investing in real estate, and including in the Netherlands, where they've bought up whole blocks of housing, apartments, and so forth and so on. So it's a very good example, and it's also a terrible example because you know, there's no regulation of this at all, and they can pretty much do what they want. And indeed, it's a rentier kind of capitalism.
Yeah, I want to talk about BBB. Do you think is it comparable to what happens in the UK with Brexit?
Well, I have a very distant understanding of the BBB. I was here in Amsterdam 1 year ago for a conference, and I just saw at the end of the city some tires burning or something like this. It was smelling a bit strange. That's my first contact with this movement. I believe, from what I've read, but I've read things from the French or the English language press, it looks a lot like this with entirely different sectors, because we are talking about agricultural capital. I know that in agriculture there are lots of issues about the technicization of agriculture, the financialization of agriculture too. So actually these are, we don't talk about agricultural funds, but actually they exist, and there are investment funds that invest in land and things like this. I can't say much about the specifics of the BBB, but the things I've read highlight a similar phenomenon with entirely different actors, I would say. Yeah.
Because I think big agro and livestock and feed factories, they didn't pay the campaign. They didn't fund the campaign. So that's a big difference, right?
Well, there's big slaughterhouses.
Or it's not proven.
Big slaughterhouses sponsored Farmers Defense Force. BBB is grown out of a PR firm, remarkable. Their clients include Bayer. Their clients include Vion. The links with this seems like a backlash from above. It's not farmers. Like, I don't think a regular farmer with 100 cows is the big problem here. It's about what I've called the kiloknoller cartel above it. All these farmers are squeezed into quite a financialized system. They are millionaires on paper, but they're heavily indebted. With the Rabobank, they have to produce on cost price because the supermarkets are competing all the time. There's animal feed companies who want to sell as much soya as possible, etc. So there's also kind of this backlash is at least fed from above. I think you could claim that.
And still the narrative is the farmers against the cosmopolites or the elite.
It's the same nonsense all over again. It's just with Brexit as well. It's also the somewheres versus the anywheres, or the higher educated versus the practically schooled. I don't know.
But how come? How come this is the same narrative again and again?
Because I think you deal a lot with sort of capitalism critique without discussing capitalism on the right. They try to explain to you why you're so frustrated without actually ever mentioning the material interest we are up against, right?
And who benefits?
Capital. Big incorporated capital also. No? Well, don't have to be incorporated, of course, but concentrated capital.
So not the farmers, the small farmers.
No, the farmers,
the big
they
farmers
suffer from Stockholm syndrome. They are captured. They should syndicalize and fight those above in the chain. They should not.
Why is it so difficult to get that message into society?
Because media don't function, because media is just populated by grifters who sell these kinds of nonsense stories.
Yeah, but there's also, I mean, we need to know much more about this. We need to know much more about these big agro firms and so forth, what they, similar to what for the Brexit. So who do they finance and so forth and so on? And that for the farmers themselves would be a great help in thinking a little bit more clearly about what is happening and what they might do.
And also from what I understand, the question it raises, for instance, in the Brazilian case, you also find the agricultural.
It's also BBB in Brazil.
Exactly, it's also called BBB, and I think the initials mean different things, but you also have these groups of big people who want to transform the Amazonia forest into a big land for soja production, etc. And they coalesced with financial actors. I think what is interesting also in the case of Netherlands is why I think it was triggered by a law that reduced a lot the ability to raise cattle, etc. So why, at some point, these powerful actors were they left out by a centrist coalition, and so they needed to push their interests? Or how did it come that they were marginalized, and so that their interests were not represented by the government, to the point that the political decisions, from what I know, that were taken were quite questioning their mode of accumulation radically. So I would like to know more about this.
Okay, I'm going for the first question from the audience.
Thank you. Thanks for this nice discussion. What I miss is a little bit in this discussion is the definition of finalization itself. For example, Frédéric Lordon gave this definition of financialization as profiting without producing. And I think this is very important for this discussion. So the profiting classes are profiting and the producing classes are not profiting. And I think this is now the real discussion. You have the financial classes who are profiting, and the other classes aren't profiting. And there's a whole discussion also going on with Cédric Durand and Morozov and Varoufakis, who say, okay, neoliberalism is over because we now have a kind of neo-feudalism.
Wait, before we're going to have more concepts. Okay.
My question is, what do you think about this discussion in the light of the definition of financialization?
Thank you.
Well, as for me, I think the neo-feudalism idea is the idea that, there was this Marxist discussion about the fact that we went from feudalism to capitalism at some point, and that the big shift was that property rights were defined and the state emerged, and it was not up to the feudal sovereign to seize property by means of force, but that it was somewhat property rights-based accumulation, and the new feudalism hypothesis is based on the idea that tech companies today are so powerful and they deal with such complex and complicated technical aspects that they are able to somewhat accumulate and decide, okay, actually this big bunch of data, it's mine, and anyway, you regulators, you can't do anything for this. And so there is a new sense of feudalism, and in the groups that we describe, I have, maybe I will regret what I said because I've not thought it very strongly, but I would say they are not neo-feudal actors at all, because they really rely on rules, property rights, regulation to accumulate. Whereas I think with some tech sectors, you can think about this ruthless power of having these very sophisticated technical tools that give you strength. And on the definition of financialization, I very much agree with the definition you've said, so I won't add anything to this here.
Rijer?
I don't think Evgeny Morozov is. He was critiquing the new feudalist kind of ideas by Varoufakis and Cédric Durand. Morozov also invoked the notion, like in a recent piece, of military neoliberalism. So there's still neoliberalism, but it's militarizing. It links up with debates on the rise of more state capitalism, state-led capitalism, I think. He wrote a great piece in New Left Review. The definition of financialization, the popular one is, I think, is it Gerald Epstein? The increasing dominance of financial markets, logics, actors, whatever, within society, within the economy and society. But I think, earning money without producing anything, it's a more kind of bit of a Marxian kind of take of financialization, which works as well.
Before I go to more questions in the audience, I want to talk about carbon trading. Théo, can you please explain what is carbon trading before we dive into it?
I can explain. So this is Nigel Farage, but he has never done carbon trading. But yeah, carbon trading is when you buy carbon credits on market. So all this actually quite neoliberal idea of making a market out of the environmental crisis, which emerged also in other sectors like social welfare, etc. But for the climate and the environmental crisis, you create a market by creating property rights. So some actors have property rights over carbon, and they can trade them, and it should lead in the end to a perfect allocation of rights to the ones who need it the most, and a pricing of carbon that would be ideal. And yeah, it has been a very neoliberal way of dealing with the environmental crisis.
I think the picture of Nigel Farage was because the recent return of Mr. Brexit, he's now working in Dutch green business, free market solutions for nature conservation.
Oh, it's interesting. Or the next book.
That was from yesterday's news. So, what
everything you need to know about green finance.
What does that tell you? That these two things are so interweaving, the Brexit and the carbon trading.
Well, I think in the end of the book, you have Bruno Latour's book here on the table, and in the end of the book, we quote Bruno Latour's Ou atterrir. I don't know, I don't see the Dutch title of the book, but yeah.
This is the Dutch one. I don't know.
And where he says that somewhat the climate issue or the environmental issues are going to become the matrix of political debates, and that this issue is going to be more and more significant, and even the central one. So I would say that we very much agree, and also this discussion on BBB evokes it. So it's an environmental issue at heart, and yet it raises the same kind of issues than the one we describe. I don't know, for green finance, I think there is a split that we don't explore enough in the book, because yes, green finance, environmental funds, environmental impact funds, so as they are called, are neoliberal institutions, but there are also ways of betting on nature, on appropriating nature, that are distinct from this formalized market trading system, where you also have actors that directly appropriate some rare resources in some context, and that would be slightly different than carbon trading, etc. So I think there is a distinction to be made within green finance that we haven't explored enough yet in the book. But there are.
But is there any way in which the carbon trading helps our problem with climate right now?
Well, I think, like most neoliberal devices, it helps to the extent that it allows for accumulation by some other actors that participate to it. So
no.
To some extent, yes, but at a far smaller rate. I mean, yes, as far as people can profit from it. So a bit, but as far as people can make a
people
profit.
Can profit from it, or also.
Well, not
nature
all people.
Or the earth, or.
Well, I think, I don't know. I'm quite. You're asking me. I think I'm very critical of these schemes. For instance, carbon trading or green impact finance. I think they produce. They invest in green technologies, they invest in green companies, they invest in projects of renaturation of areas, etc. But if you look at it from a macro perspective, you could just do these types of initiatives, maybe sometimes in other ways, less, well, if you think about green finance, you have lots of issues with post-colonial dimensions of green finance, buying forests in Malaysia and protecting them and using it at carbon credits for global north companies. But they produce something from an environmental perspective, but it's conditioned to the fact that it can generate a return, that it can be embedded into the evaluation of financial markets, and that's actually the issue.
Is there another question from the audience?
Thank you. I have two questions that are, in a way, suggestions. And the first one is, you asked why were the farmers and their financiers left out of the political process? How did this happen? My suggestion would be Europe, EU legislation, basically. Which in Holland, the capital that's invested in agricultural production might be larger than in the rest of Europe. What would you say? And the other one is...
What would you say about it? And maybe also to the other participants.
Yeah, so I'd like also the view of the others, because I'm not a Dutch connoisseur, etc. But I'd say it would echo very much what we saw, where a dominant elite in the Netherlands would be dominated at the European scale, and so somewhat that would create frictions. But so I would find it interesting. But I'll let you reply as well.
I think the economic logic in the agricultural sector has been very similar to other sectors. I mean, there has been increase in scale, rationalization, concentration of financial resources and so forth and so on, increasingly producing troubles for farmers and so forth. And farmers lost in the process their faith in their traditional political representatives, being the Christian democracy, like workers lost their faith in the social democracy, farmers lost their support, traditional support for the Christian Democrats, and BBB is partly a product of that. So, I mean, the economic logic and the role of banks in this concentration sector is very similar to what happens in other sectors.
Yeah. Okay. The second question or suggestion.
Actually, in response to your question, why does this keep happening in the way it's being spun? Culture wars, like that would be my suggestion.
Are we talking too much about identity?
Well, so my suggestion would be that journalists actually love the culture war and they dive into it as soon as it's being thrown about, and this actually takes the economic question off the table.
What do you think, Rijer?
Yeah, I think that's true. But I think again that the right really is gaslighting the left here. Like, you are playing culture wars and identity politics while the right swims in it. But we never talk about that because that is the normal and the way we do things. I agree. Yeah.
Okay.
Because when you talk about identity politics, you don't talk about these material interests we all, should discuss, right?
I was thinking about this distinction between the first wave and second wave financialization, and I tend to associate it with what Johan remarked about rentier capitalism. And what you see is, I think that with these hedge funds and these real estate funds and private equity funds, the financialization is very much making money for money in a way that it distances itself from the benefits that producers have from capitalism. And the distinction between the first and second wave might be, I mean, that's just a question, in which rentier capitalism and the deregulation required for it is so large and is so much in the interests of the second wave that there's a potential conflict between second wave and first wave. But vis-à-vis this idea of rentier capitalism, which is rigged to a certain extent, which is a kind of rigged capitalism, and how can you defend capitalism if you only get this kind of rentier capitalism in which people get so rich that it's only on a clear day that they can see the middle class? I mean, they've sort of separated themselves from society, and the interests they have are so distinct in that sense, or are becoming so distinct from normal capitalist interests, that I think that there's a conflict there. And I don't know whether that's within neoliberalism or from neoliberalism to something else. But
maybe also, what is the solution?
Well, I don't know what the solution is, only that I think that it is interesting that within capitalism there might be a conflict of interests between capitalism in which benefits the producers vis-à-vis capitalism that only benefits itself.
Yeah, and I'm also wondering, maybe I'm really naive, but I really want to ask this question. Isn't it possible to just make it illegal to make money out of money, or only money out of money?
I'm not sure actually that the people we describe second wave finance, they make more money out of money than other actors. To the opposite, I would say that they are closer to production than, let's say, investment banks, for instance, because private equity funds, they invest on small and medium businesses, and they buy them and they restructure them and they ask for layoffs and for dividends being paid or debt being paid out. And real estate funds, you really have people in real estate funds that choose, okay, this area of this city, it's really interesting, we want to buy it, how does it look like, the architects, etc. And they are really close to the world of production. They are not producing anything, but they are closer, and that's also where conflicts can arise. And also, I would say one thing, which is, I see...
Maybe you have a discussion later on at the bar.
But because they are...
Closer to the world of production, but they're breaking production.
Of course, yeah.
Okay, we're going to have the discussion at the bar later on.
That makes them... they are at the forefront of financialization. David Harvey talks about the limit to capital. They are really at the frontier of capital. They are the ones who turn activities that are capitalist businesses, house renterships, etc., into financial activities where you, as you said, get money while not producing anything. So they are involved in doing this work, but in doing this work, they deal with the real world somewhat. They are constantly clashing with these groups that defend their neighborhood, that defend their green area, that defend their small business against layoffs. And the second point is that there are links between these two groups. You talked about Blackstone. That was initially, I think, the same company as BlackRock, but there are many private equity funds, for instance, that were initially banks, subsidiaries of banks that banks created because they thought, oh, that's an interesting market, it's emerging, it's booming. We are going to create a private equity fund. And then they took their autonomy, they took their independence, but they still get money from previous actors. So there are circles and interdependencies between all these actors that makes the game difficult to analyze. Yeah.
Okay, final words for you, and then we're going to round it up.
Okay, well, to come back to the question, I think so. You have to make a distinction. Hedge funds are speculative financial capital, right? They are far divorced from the world of production and so forth. Private equity is a different story. Private equity firms are specialists in extracting economic value from productive firms. You know, that's what they do, and they have optimized these extraction techniques. You know, how you can profit maximally as very small financial firms, maximum from the productive capacity of firms you take over for a little while, then you sell them after having extracted lots of money in very different ways, and their strategies have diversified over the years. It started as raiders in the 80s. It's the beginning of private equity. But now they have a more diversified portfolio. And I think my hypothesis of the current economic system is that it's actually dominated by private equity. You know, all the firms, the largest
in what way?
To the smallest,
can you explain it a little bit more?
Fear that they will be taken over, and in anticipation they adapt, they try to profit, and so on. So private equity is today the dominant force in the world of business, whatever it is.
Can you maybe give one example?
Well, for example, I mean, of these things, we know very, very little about private equity. A little bit for the UK, a little bit for the US. For the Netherlands, virtually nothing. And that raises the question, why do economists, business people and so forth, do not study this? So that's one question sociologists would ask. Why is it not studied? The second thing is we should, of course, study these firms and so forth. Recent example, takeovers of one of the private equity strategies of general practitioners in healthcare. Their practices are taken over one by one. Vets also, you know, dierenartsen, they are taken over, and they are concentrated, they become very large, monopolistic firms and so forth. And this is going on now. I don't think there's anybody who seriously studies this for the Netherlands. There are I read in the Financieel Dagblad the other day, every year...
There was a Volkskrant article this week about it. There are some journalists studying it.
Okay, well, I mean, there are every year about 100 takeovers by private equity in healthcare, only in healthcare. And this is all done extremely discreetly, and journalists and social scientists should take this much, much more seriously than they do.
Okay, no, sorry, we're going no, sorry. Last word for Rijer.
There are some researchers who do who research the rise of private equity. A colleague of mine, Rodrigo Fernandez, he studies the entrance of private equity into childcare, daycare, kinderdagverblijven in the Netherlands. Yeah, Canadian firms consolidating, I don't know, tens, maybe hundreds of these facilities. Another point I wanted to make is that the book is actually way more nuanced about this difference between first wave and second wave finance, and these are ideal types, right? And you really argue in the book that it's very difficult to draw clear distinctions if we look at certain players, and there are many connections between the two. But it still really works to show this shift in time. But the book is very nuanced on this, actually. So koop
het boek. Nogmaals. Thank you so much, all my guests here today. And again, also Théo Bourgeron, thank you so much for coming all the way with the train here from Scotland.